Hi, this is Ken Boyd with St. Louis Test Preparation. This is the website, St. Louis Test Prep. Please bear with me. I've got some beeping. I'm on a new version of GoToMeeting that I can't get rid of. So we'll try to clean that up on sessions going forward. I also wanted to mention my Business Accounting Ed, which is a think tank, an online training academy for accounting. You can try it for free 3 days for free right now. We're adding content all the time and have over 20 hours of content if you're watching this in May of 2015. So great article that I wanted to cover from the Chicago Tribune that's called "Who Cares That IPOs Lack Accounting Standards Where Nobody Really?" And the issue here is that we have initial public offerings coming out, IPOs, with significant accounting issues that are reported, and people are buying these offerings anyway, in spite of the problems. So the first thing I wanted to do was to talk about and define material weaknesses in accounting controls. So the first is that a material weakness is defined as something that is relevant or large enough to make an impact, so that if you were a financial statement reader, the dollar amount in question would be large enough that it may change your opinion of the financial statements you're reading. Relevant material. If you have material weaknesses, there's really two big problems that could happen. The first is you could lose assets due to fraud or theft. If you think about inventory, if you don't have controls to protect inventory, you might lose inventory to fraud and theft. The second is that you end up producing financial statements that are materially incorrect, which means you don't have controls in place to do proper journal entries, proper adjustments, proper review, which is what we'll see in the article in a few minutes. Now, the risks are now more significant if you're a senior executive in a public company in particular, because of Sarbanes-Oxley laws. Because Sarbanes-Oxley says specifically that the CEO or the CFO must provide written assurance that internal controls have recently been reviewed and report on any weaknesses and take steps to correct them. It is a written document that's going to be included along with the audit report when you look at an annual report for a public company online. So the stakes are much higher, is my point. If we jump over to the article, we see a study, and really the gist of it is in this paragraph, which says about 30% of companies that went public last year acknowledged that they were at serious risk of incorrectly reporting their financial information, according to a study by this law firm, up 17% from 17% of issuers in 2013. And you can see that some of these are pretty significant material weaknesses, with some recognizable names. Grubhub, food delivery, we'll see in a minute. GoPro, pretty significant problems. And the point here is the lack of concern is part and parcel of the risk-taking mindset that has seen investors overlooking earnings and valuation metrics. In other words, will buy the stock regardless of how expensive it is compared to earnings and assets. So let's look at some of these specific problems. Talks about Sarbanes-Oxley in this paragraph, which I've already covered. Grubhub neglected to regularly document its review journal entries. How can your financials be produced correctly if you don't review the journal entries? Install building products, 7 financial adjustments. Now, I'm assuming those are adjustments that auditors are asking them to make before the financial statements are issued, and they're not a restatement. It's not clear in the article. GoPro needed better internal controls to prevent errors. And then the big one down here, and the one that's most concerning, is restatement. SD, online marketplace for handmade and vintage goods, went public after disclosing 2 material weaknesses. They couldn't correctly account for income tax related expenses. Still trying to work out the problems. The problem with restatement is that people are relying on financial statements that have already been issued. And if you come back and change them, That's a real problem because they've already relied on them. So the gist of the article, again, the points that I wanted to get across were a definition of materiality and relevance. The two big outcomes, bad outcomes that can happen if you have material weaknesses. How Sarbanes-Oxley has raised the stakes for public companies when it comes to internal controls. And then finally in the article, some actual examples, and I'd encourage you to read the article from the Tribune. Remember that St. Louis Test Prep lists all the books and also links to all the videos on YouTube. And finally, Accounting Ed, a think tank that we've created with, at this point, 22 hours of accounting content we're adding all the time. It's a subscription-based site, and you can click here for a free trial. So I'd love you to try Accounting Ed. Thanks very much for watching, and we'll see you next time.